Hello, everyone, and welcome to the weekly roundup. Today, we'll be discussing interest rates, inflation trends, earnings releases, and recent market volatility. Hello, Ben.
Hey Eva, happy Friday.
Yay! Awesome. Okay, let's get right into it. We'll start off with the macros. The BOJ adopted a more hawkish stance. What is the effect on this on the yen and on the markets in general?
Yeah, so great question. Thanks. Lots going on in the macro landscape. With Japan, we've seen this kind of everyone's been talking about the carry trade unwinding, and so you had the view that the Bank of Japan, well, at least for the past 30 years until about a month and a half ago, was that they would keep rates at zero forever, effectively, yield curve control. And then they've started to move in the other direction. And then yeah, Bank of Japan yesterday again came out last night and effectively said they need tighter financial conditions. And so, we've seen the yen, it was up about 1% or so versus the US dollar this morning. I think it's hanging around there, plus or minus right now. And equity markets are actually up a little bit. So you have some conflicting things happening with the Chair Powell was speaking today at Jackson Hole.
Mhm.
So we can comment on that a little bit. But directly related to yen and markets, one of the slides, I'll show you a quick snapshot of
Okay.
just where and what it's come to. But certainly, I think there's still major implications to play out if the Bank of Japan all of a sudden decides to take that tactic where they're raising rates and not having as easy policies. So that could take some of the air out of the market presently.
Okay. Yeah. Let's go into some earnings releases. We saw Target better than expected. Some of the Canadian banks, I believe. Any numbers worth noting?
So Target's numbers were better, as you comment. Stock rallied. One of the kind of the things that I've seen out of most of the retailers is they've been talking about theft increasing dramatically, and that's kind of been a drag a bit on earnings. If you look at Canadian companies like Loblaws and such, their theft is up, and Canadian Tire and all of these things. So interesting to note that that's a bit of a signal for the health of the economy. Um, and so they did revise their full year forecast a little bit lower target. The market still took it as a general positive and the stock rallied. The banks have actually had pretty good earnings in Canada. And TD's had a settlement announced officially that they have a $3 billion to pay, but market was anticipating something maybe a little bit higher than that with some of
Okay.
their issues in the US. And so TD was up about 1% on that news. So uh, Canadian banks have been pretty good. I'd expect loan losses to be going up at this point, but we haven't seen that dramatically yet. So maybe Canadians are a little bit better shape than we may have thought.
Yeah, good to know. Let's talk about the markets. Gold is testing an all-time high. The market has also seen heightened volatility. What is driving this, and what should we expect in the coming weeks?
So I think from a market perspective, we've gone through an extremely long period of low volatility. Like we went, I don't know, 400 days or so without a 2% drawdown. So you kind of get lulled into a sense of things are easy. And
Yeah.
so I think that dynamic has changed because volatility's kicked up since
Yeah.
August 2nd when we saw that bit of a panic there. So I think we're going to continue to see these swings in volatility. We haven't seen that in a while. Historically, at least when you move from an easing cycle to a hiking cycle, you tend to get a lot of things moving in different directions. And so, there's definitely the doomsdayers out there that draw references to 2001 and 2007 when they started hiking. Those periods were quite dramatic where we saw kind of 40 and 60% drawdowns after they started cutting. So, I'd expect heightened volatility. And so we'd be watching that. And sorry, I forget the second part to the question that you asked me about.
Gold.
Gold, yes, gold. Yeah, so gold is pushing up as you note on to all-time highs. And so it's interesting, right? Because gold historically has told you that you go up when inflation's rising, and now it's actually going up while inflation's falling. So maybe it's something else. One of the charts I'll comment on a little bit,
Okay.
but it's interesting to see how it's reacting. And the stock prices are starting to react as well. We're seeing some gold companies be taken out at higher multiples. You're starting to see a little bit more interest in the companies. Even the silver companies are up significantly this year as well. So you're seeing the companies start to play catch up as the prices are elevated. So that'll be continuing worth watching for the next couple of quarters.
Okay. Anything else caught your eye this week?
I'd say nothing else really specifically did. I think that I've been commenting on Jackson Hole this week, so it'll be
Yep.
worth watching there.
Yeah.
Nothing else really material that I saw that jumped out at me, except for which we spoke about earlier this week is massively conflicting data. So as I try to work our way through what we're seeing, I'd say that was the only thing that maybe jumped out a little bit is
Yeah.
that we got a lot of conflicting data.
Okay. Any portfolio changes?
So no, still looking to trim bonds a little bit as we've
Okay.
seen a good rally here, and so I'd still be looking to do that. From a big picture perspective, I think there's still areas that are attractive. Powell's comments today were around effectively saying that they don't want to see employment weaken from here further, and that they'll start cutting rates effectively in September. So we saw an initial kind of spike into the equity markets based on what he said, excuse me. And so we'll see how things fall through from there. But I think that's it. He's effectively said we're going to cut rates, and you need to be prepared for what that's going to mean.
Yeah,
Yep.
absolutely.
Mhm.
Okay, let's go into the charts.
All right, August 23rd. So, as I say, we've looked at a lot of the charts this week, Eva, where everything looks a little bit different. Market's a little bit unsure what's going on and where we go from here. We saw, as we talk a little bit about credit card balances at an all-time high, auto loans delinquencies increasing, mortgage pressure still as well. So I think the market's also starting to do that a little bit. So if we look at these different variables, we have TLT, which is the purple line, and TLT is the ETF that tracks the U.S. government bond 20 plus year bonds. And so from the start of August to today, TLT has been the number one performing asset class. This is Goldman Sachs Commodities Index, the S&P. DXY is the Dixie, which is the US dollar proxy that people track globally generally. And CLO is CLOO, so that's like U.S. housing bonds. And so you're seeing a real kind of conflict as market's a little bit unsure what happens. I think the one thing that everyone's certain with after what Powell said today is that U.S. dollars going lower. So we had the euro rally, which would be a big part of DXY, and Canadian dollars actually doing a little bit better than you'd expect. So with Powell going on the decision to cut rates, I'd say the one thing that we're certain about is US dollar weakens from here. But the rest of the market's a little unsure. Is the economy slowing a little bit quicker than we expect? So we want to have some duration in the portfolio. So this will be interesting to watch to see if there's a reversion or this continues higher. If you listen to David Rosenberg, then it certainly continues higher from here. I thought this was a great thing that I saw today, and it gives you just a little bit of context around the devaluation of your currency, I guess. So in 1929, if you had 10 gold bars, You could buy your average house, which was worth about $6,000 at the time. If you had 10 of these today, you could effectively buy an average home in 2024 as well, which is more like 600,000. So just to give you a context around how obviously your currency's gone down and the price of gold has kind of maintained its balance. So interesting view just to think about what this means. And I thought this really jumped out at me, certainly as I talk to people about buying their first homes and just the prices and changes and something that we don't always think about. So another chart on gold, Eva, what you mentioned before, what's likely the path forward from here? This was a great chart from Fidelity, Jury, and Timmer. Parts out, obviously always great research, but this research is kind of backed around real rates. So as real rates get positive, tends to probably be quite good for gold. We've seen a big move since the start of this year, of course. And so this will be worth watching. And so the view is maybe gold's starting to play catch up to some other asset classes. And if real rates continue where they are, where we got a positive carry, then you'd likely see gold continue higher from this point. So certainly continue to pay attention to this. So the last comment or the last chart of the day is one that I grabbed from one of the research individuals that I follow, just about the yen and the Nikkei and probably the rest of the markets for that matter. Everyone has different ways that they view the market. It's always worthwhile, I think, thinking about how people see it differently. And this is a technical gentleman that follows really kind of an Elliott wave theory, which is quite detailed, but effectively what this means is most of that carry trade has been put back on. And then we had some of the hawkish comments from Bank of Japan. And so his comment is maybe we've retested that level and we could see a potentially another material adjustment coming over the weekend. So it'll be worth watching. But so this is, I thought, an interesting view on what's happened and what's transpired. And I still think it's a material thing that we need to be conscious of if yen starts to move up further over the weekend, and then we'll see what happens next week with it. So that's it on the charts this week. Oh, still got you muted there.
There you go. That second gold chart was so thought-provoking. Yeah, 10 bars.
Yeah, exactly. Hasn't
So
changed.
what? Yeah. In how many years? That's intense.
100. Yeah, exactly.
So what's on the agenda for this week or next week?
Yeah. So I think we'll watch Jackson Hole over the weekend, see what comes out of that. Potentially, if we see an unwind with the yen further, then maybe a bit of a correction into the market. We'll pay attention to that. And just the final push of earnings for TSX and the S&P for the end of the quarter. And so I thought one of the things as I was listening to targets this week, I was thinking, so how do they do such a good job of forecasting their quarters? But you know what I think happens is they don't release most of their information until we're 3/4 of the way through their next quarter. So we get a pretty good gauge for what's happening. So I'd be looking through the Canadian financials as well and just saying, what's that look like? What else is happening there? Are loan originations picking up or slowing down to get a gauge for what to see happen in the back half of the year? Still really think that rates come down in Canada and in the US. Obviously, we know now that they come down in the US for sure. But the question is how quickly do they come down in Canada? And so I'd be watching for further signs of that. But we do expect 2 or 3 before the end of the year. So continue to watch those data points and seeing what we can do to make sure we're prepared for what's coming ahead.
Yeah, fantastic. Lots to look out for in the coming week.
Absolutely.
Okay, thank you. Please visit and subscribe to our YouTube page, Hart Investment Group, as well as our blog, Daily Heartbeats, for more financial news, analysis, and updates. As always, please reach out to me if you need anything or if you'd like me to book a meeting with Ben. Thank you for listening and have a great weekend.
Thanks, Eva. Thanks, everybody. Take care.
Bye.